2021 is done, and it's been another year full of ups and downs, and then ups again in the Toronto real estate world. I was reviewing our videos, our social media posts, and our newsletters, and it's interesting to see how our market views are now actually pretty different compared to how the markets first reacted when we were met with the news at the time. So in this video, let's do a playback of 2021 and look at it from two different lenses. One, how the markets reacted at the first onset of the news, and two, how things actually panned out. The goal of this is really to help us understand the Toronto real estate market better so that we can make faster and better decisions when we see new things coming our way in the future. Before I start, don't forget to give this video a thumbs up if you like content like this, and subscribe to our channel so you see more videos like this made specifically for real estate investors in Toronto. Let's dive right in and go back to the beginning of 2021. COVID cases were rising, and we ended up going into another lockdown in Toronto at the beginning of January in 2021. But despite that, economic sentiments were actually positive because vaccines were rolling out for the first time. What this translated to was that sellers were holding off because of the lockdown, and they didn't feel a rush to sell because things were looking up for real estate. At the same time, demand was strong, even with the lockdown, because buyers also thought the same thing with real estate prices trending upwards. With a tight seller's market, news that home prices shot up double digits in January of 2021 alone attracted even more attention to real estate. Once our lockdown ended in mid-February, more supply started coming onto the market, which fueled more buying momentum and kept Toronto real estate markets very hot until the end of March of 2021. Looking a bit further back, remember that Toronto condos were slammed for the whole of 2020, and prices were down 11% by year end compared to pre-pandemic. Well, it was also in Q1 of 2021 that we noticed a bottoming out for Toronto condos, and so condo prices finally recovered to 1% above their pre-pandemic levels by the end of Q1 of 2021. On the freehold side, Toronto semis were down 3% by year end of 2020 versus pre-pandemic. Then they came up by 11% in Q1, so by the end of March of 2021, Toronto semis were up 8% versus pre-pandemic levels. Toronto detached homes were up 5% by year end of 2020, and then saw an 18% spike in Q1 of 2021. And so Toronto detached homes were sitting at 23% higher than prices pre-pandemic at the end of the first quarter of last year. GTA homes were definitely in the lead. They were already up 16% by year end of 2020, and then saw a 12% increase in Q1 of 2021, which meant they were now 28% higher than prices pre-pandemic by the end of March of 2021. Things were definitely very positive in Q1 of 2021, but the tables turned pretty quickly in Q2 of last year. Right at the start of April, we heard news of stricter mortgage stress tests. Practically, it only reduced borrowing power by 4.5%, but this definitely worked psychologically to hit the brakes on the buying momentum. On top of this, inflation started to become a concern, and because this was very new at the time, there was more uncertainty in the markets, and real estate investors didn't know how inflation would affect real estate. Was it transient? Would it stick around? Will central banks start tapering and raising interest rates soon? And how would that affect real estate growth? There was also the fact that prices went up so much in Q1 of 2021 already that might be all of the growth that we would see that year. And then more reality started kicking in. Toronto real estate prices shot up, but rents were still dropping, so investors were wondering whether rent yields would be crushed. And then, to top things off, we entered another lockdown yet again in April, so this sealed the deal to slow down real estate activity in Toronto. As a summary of Q2 of last year, detached homes in Toronto were down 3%, semis were down 2%, condos went up 1%, and GTA detached homes went up by 1%. This means these suburbs were still in the lead in terms of price growth since the pandemic, up 29% by the end of Q1 of 2021. Once school was out and summer arrived, it appeared that real estate sentiments were much more balanced. Our city was reopening and we saw good news about Toronto rents recovering as well. Remember, one of the biggest negative impacts from COVID to Toronto real estate, especially condos, was on rental prices. Rents have been dropping and were down 20% at the start of the summer of last year compared to pre-COVID. And then finally, during the summer of 2021, rents finally recovered 5% on the condo front, which was another big turning point and gave more confidence for investors to consider Toronto and even more so Toronto condos again. But even with this good news, nice weather and the city finally reopening meant more people just wanted to go out and enjoy life instead of look at real estate. So it was definitely a more typical real estate slow summer market last year in 2021. In July and August, Toronto detached home prices went down 1%. So by the end of the summer, detached prices were 19% higher than pre-COVID. Semis went down 4% over the summer, and condos went up another 1%. This meant by the end of the summer, semis and condos were both at 3% above pre-COVID levels. These suburbs continued to lead the pack, growing 2% during the summer, and so prices were now 31% higher compared to pre-COVID by the end of summer of 2021. Real estate sentiments turned even more positive once schools started reopening again in September. Inflation looked like it was here to stay, which meant interest rates were expected to rise sooner than previously expected. By December, it was clear that monetary policy prioritized tackling inflation as opposed to slowing down rate hikes, even with the new Omicron variant. All of this actually gave buyers more confidence in real estate, and their priority is to get into the market sooner before prices continue to climb and have an opportunity to access lower interest rates while they still can. Just like the beginning of the year, when real estate prices were expected to continue to go up, sellers didn't feel the rush to sell. So from September all the way until the end of December, the key theme has been a big supply shortage that has put a cap on the number of sales and also resulted in prices heading up more quickly. For the last part of 2021, we saw an increase in real estate prices across the board again. As of the latest November data, Toronto detached home prices were up 7%, which brings the grand total to a 26% price increase compared to pre-pandemic. Semis came up the most in the last 3 months, up 17%, totaling a 20% increase compared to pre-pandemic. Condos went up 3% over the last 3 months, which meant they are now up 6% compared to pre-pandemic. GTA detached homes went up another 9% over the past 3 months, totaling a 40% increase since the start of COVID. Now that we've gone through all of that in 2021, here's a few things to keep in mind to help you understand how Toronto real estate might react in the coming year. Number 1, in general, Toronto real estate buyers seem more reactive to negative news compared to suburban buyers. Take a look at this. Even with the markets flooded with negative news in Q2, it was Toronto core that took a downturn, but the suburbs continued to plow ahead without as much of an impact. Now, it's possible that it's because Toronto has more investors who react more cautiously or another reason. But either way, this caused a widening gap in growth between the suburbs and Toronto and points to more reversal opportunities and faster growth prospects in Toronto, which might narrow down the gap once again. Number 2, Toronto condos seem to be most sensitive to rental prices. Once we saw the bump in rents over the summer, that's when condo prices saw their big uptick. And then, even when other markets continued to go up for the rest of Q4 of 2021, condos lagged behind when condo rent growth slowed down again. In 2021, the markets went from not knowing how inflation would affect real estate markets to fearing that rate hikes would dampen real estate price growth to now seeing real estate as an inflation hedge. Plus, the central bank just released their reinforced mandate stating that their primary objective is to keep inflation at 2% until the end of 2026. And what about managing real estate prices? Well, that's something that the government should be taking care of, not monetary policy. They also mentioned that they will hold its key rates at low levels for longer than usual if it is needed. In other words, inflation is now positive for real estate, and that's why we expect real estate demand to stay strong in the short to medium term. Number 4, it seems like new variants and lockdowns don't affect real estate demand in one way or another. For the January lockdown, demand was strong. When Delta came along and the April lockdown happened, demand slowed down. Right now, demand is still strong even with the new Omicron fears and higher COVID cases. On the other hand, lockdowns were more obviously slowing down supply, with sellers holding off on selling homes until it's safer to do so. COVID also creates supply chain issues that also slows down new supply. So what this means is that until COVID settles down, we're probably going to continue to see lower supply, which might cause prices to continue to go up more quickly. If you're like many of our investor clients who are bullish on Toronto real estate, our team can help you make more objective, analytical, and overall better investment decisions. When you work with us, we look at your requirements and preferences and then match you up with the best investment property solution that fits your needs. After we help you buy it, our team also provides renovation guidance, leasing, and property management if you need it. So just connect with us if you want to learn more about our services by heading to the link in the description below. Don't forget to give this video a thumbs up and look for us on Facebook, Instagram, or LinkedIn if you want to hear from us more regularly. I wish you all the best in your real estate investing journey. Thanks so much for watching, and I'll see you in the next video. Bye.